Okay, so let's have a look at the gold market because gold is in a really interesting position. Well, you can see these lines on my chart and I just want to go through them very quickly. Don't worry if you've never done technical analysis. This is pretty simple stuff and I can show you very quickly how I analyzed this gold market and gave my potential low in gold around the 1341 level. Well, one thing I'm looking for in a market is I'm looking for the market to make a correction, and a correction is usually against the trend. You can see gold has been making a really nice move up, and in fact many people were thinking well gold was going to get to about $2,000 an ounce, but at this point here gold hit a 60-year cycle and it just fell away. So I was watching this market looking for a decline, and in fact that's exactly what gold did. Now these declines play out over a long period of time. You can see that that started around the 2011 and we're in 2013, so these aren't fast, these markets. They're very slow. They take their time to move. So how did I work out potentially that we might have a low in gold? Well, I use a very simple form of pattern analysis, and this is I'm looking for an ABCD pattern. This wave here is your A wave. The move up against that is your B wave, and the last one is your C wave. And the great thing is about the C wave is C waves and A waves often equal each other in time and price. So that is how I came up with the idea that there might be a low in gold around this point. So what else am I looking for? Well, when you break down these waves, not always but sometimes the last wave breaks into a 5-wave or a 7-wave structure. So let's have a look at this one. Okay, gold is really in a great place at the moment. If you're thinking of a trade on gold, now is the time to start looking at it. I'll show you my analysis and you can see what I see. Well, what I was looking for on gold was I was looking for some decline in gold, at least 5 to 7 or 9 waves down. Now I then ran my cycle analysis tool and it identified that gold possibly would make a low, a primary low, this is the one I'm interested in, on the 16th of the 4th, which it did, and then gold rallied up. So potentially the 16th of the 4th is the low in gold. So then what I do is I wait for the market to react off my potential cycle point, and then I wait for a secondary low to come into play. Once I get a secondary low, I can get into the market with minimal capital exposure, and potentially the market's already confirmed that it's going to move up. Well, on my website forexplanet.co.uk, just on Thursday I think it was of last week, I actually posted a analysis on gold, and I said I thought that on the 20th of May gold would make a low, and I had projected 3 levels. This was the 78.6 level, this was the 88.6 level, and the last one was 127% extension level, which is down here. Well, as it turned out, I didn't know which one it would stop at. Gold stopped on Monday rather. It stopped at this level. You can see that the time was absolutely perfect. I just put the cursor there again so you can see that that is the 20th. You can see that's the 20th of the 5th, and that was one of my 3 projected levels. So when gold got to that level, that was a buying opportunity for me, because look, where do I place my stop? Well, I place my stop below this low, and that is it says 200, it actually looks like 2,362, which it isn't. That's actually a 23-point stop on gold for me, and I can get into the market with the maximum capital per pip, so I can trade for the maximum pips per point by getting in at a better price, but I still only risk the same amount of money. So if you get in down here, you can risk $500 on the trade, let's say, if your account will hold it. Whereas if you get up here, you can't risk $500 because you've got a stop which is going to have to be 3 times as big. So you can only risk a third of the amount per pip that you would normally do. So you can Identify high probability zones where you look for a market reversal and then wait for the retrace back down again, because that's where you'll make the money. It's getting in at the good price, waiting for the market to confirm. Now, will this market definitely go up just because I've got the confirmation? No, it doesn't mean it will definitely go up, but it means I put probability in my favor. Many people will have seen this bounce, and market makers obviously have also identified this as a potential reversal level because the market reacted off it. So where's gold going to go? Well, I actually don't have a clue where gold is going to go, but let's say that gold just repeats what it's done in the past, and that this is indeed what gold does. So let's look at what gold has done when it's corrected against a downtrend. Well, that's one correction against a downtrend. It moved up quite substantially. This is another correction that it did in a downtrend. So we can just copy that and just put that here. You can see that they're quite consistent in length and also time, those two moves that gold made. So this is the last one, and this is the substantial correction that gold made in the opposite direction to the trend. But you can see that they're all roughly similar in terms of the sorts of amplitude of move that gold makes. So quite simply, what am I looking for on gold? Well, even if gold does not go up and take out the previous high, could do. This looks like it was a correction move, but if I'm wrong, what should gold possibly do? Well, it should do a similar retrace to what it's done in the past, because that's what the market does. It keeps repeating, not exactly, but roughly the same sort of moves. So if gold comes up from here, I have a possibility that it's going to make a minimum target, and I'm not sure what that is, whether it's 2,000 or 22,000 points. Let's say it's 2,000 points. If gold comes up 2,000 points from where it is now, it's going to be what it often has done in the past, and you can see that that's also lining up pretty well with an area of resistance, which is anywhere from here to here. So potentially we've got a great move up in gold, and gold might continue to decline further once it gets to this point, but that is quite a distance away, and it ties in beautifully with the sort of cycles that you see in the gold market. Gold tends to traditionally make a low sometime around May, June time, and then it goes on a little bit of a march as it's actually bought up for various festivals and also for various wedding ceremonies across Asia, because gold is traditionally given as a gift when people get married. So gold has a great future in spite of what you might read on Bloomberg or CNN. I think gold is moving up, and that's my outlook for the moment. So the next analysis I'll be doing on gold will be on an intraday basis. If you're a member of my trading room, you can see me do this in real time. I'll be looking to get in on an intraday basis and really hammer this move in gold to extract as much money as possible from it. If you're interested in coming along and joining the trading room, be my guest. Everyone's welcome, whether you're a novice or an expert, and you get the benefit of watching me trade real time and also helping you analyze the market so you can make money.